I'm only showing the bottom half of this. Hopefully you've printed this off so that you can work through this. First two, really easy. It's just calculating simple tax. The first one, you're going to take the dollar amount that you spend, $149 on the stereo, times 0.08, which is your tax, or 8%. And so that's going to be $11.92. Easy, easy, easy. Next one is not too difficult, but what you're going to find is you go to the store and you buy $87. That's before tax. Then they're going to put a 7% sales tax on. Then they're also going to put a city sales tax of 1.5%. And then you're going to have two of your items that is part of this $87, $9.75 that you have to pay some sort of additional excise tax on. And excise tax is going to be paid on items like tobacco products, alcohol products, gas has an excise tax. You've already been through supply and demand. They typically put it on things that have an inelastic demand. Inelastic demand means when you change the price, the quantity demanded does not change very much. So they realize that if they change the price of alcohol and tobacco and gas, we are going to continue to buy those items at about the same rate that we were before. So they're going to put an additional tax on things that they know that you will continue to buy. So that is an excise tax of 2%. So what we have to do here is calculate this $87 times the sales tax, 0.87, which is going to be equal to $6.09. And then you're going to have to also pay a 1.5% city sales tax on the whole thing. $87 times 0.015 gives you $1.31 in tax. Then of this $87, $9.75 you have to pay an 2% excise tax on, which is going to be 20%. So if you take your 20% excise tax, your $1.31 in your city sales tax, and your $6.09 sales tax, you have to add those three to the $87. So $87 plus $6.09, $1.31 and 20 cents is a total of $94.60 that you are going to have to pay to walk out the door. So just be careful here on this right here, because that $9.75 is part of this. They're just only going to make you pay that excise tax on that. And then this final one, this is the marriage penalty. So you have the schedule up above that's on this piece of paper here that's showing that at between $10,000 and $19,999, the federal income tax a person has to pay is going to be 12%. Then when they make $20,000 to $29,000, or just on that amount, they've got to pay 17%. And so this is called a tax bracket. And so what it's showing is when you fall between those two income levels, the percent that they're going to take out of your paycheck. Once again, notice that this is a progressive tax. As your income increases, their percentage of the tax goes up. So when we talk about a marriage penalty, if a couple is allowed to file individually as single people, they take their own income, they could potentially fall under a lower tax bracket. But when you get married, you have to add them together. So let's say, you both are making $20,000, and so you'd fall under this 17. Well, once you combine that $20,000, once you get married, that puts you up into the 27% income tax bracket. So you're making the same amount of money, $20,000 and $20,000, where you could have each individually paid $17,000, but because you got married and you have to combine those two income, it puts you in a 10% higher tax bracket. And so that's what they consider the marriage penalty. So down here, what we're seeing is Mr. Jordan earns $22,000. Mrs. Jordan, you can't hardly see that, but that's $26,000. So if you go up to the tax brackets up there, $22,000 falls in the 17%, and so does the $26,000. So separately, $22,000 times the 17%, you would pay $3,740, and then the $26,000 times 17%, you would pay $44.20, and if you add those two together, you're going to get $81.60. But the government says when you get married, we have to add those together. So at $48,000, we actually fall in the 27%. So if we take 48,000 times 27%, they're going to want 12,960. So the difference between these two numbers is 4,800. So what you see, if you could, making the same exact, if you could file separately, you'd only have to pay the government 8,160. Once you combine your incomes, puts you in a higher tax bracket, you have to pay more. And in this one, the tax penalty for being married is $4,800, and that's for the year. So that's quite a bit. They do try, when you look at the tax bracket, there are different columns, and we will look at one of those in one of the next videos. But there are different columns for whether you're single or whether you're married. So those people who are single and married, they're going to take different amounts from you to try and compensate for that marriage penalty. But still, if you could separate your incomes and file your taxes separately, your federal income taxes, you wouldn't get quite the hit that you do when you get married and combine your income.